With the earnings season ongoing, U.S. stock markets rally with the major U.S. stock market indexes reaching new record high levels. In this report, we are to discuss the earnings schedule in the coming few days, how the market seems to be decodifying the Fed's intentions, Boeing continues problems, and for a rounder view, conclude with a technical analysis of the S&P 500. We make a start with high-profile companies which are to release their earning reports in the coming few days. Today we have IBM and Tesla, with e-car automaker generating substantial interest. It should be noted that Elon Musk requested more power by increasing his shareholding in Tesla and added an element of blackmail by stating that otherwise he would feel uncomfortable to continue developing new technologies within Tesla. The company is expected to report a higher revenue figure, while the earning per share figure is expected to slightly drop, implying some issues regarding the cost structure of the company. We tend to focus also on the releases of high-tech giants, Microsoft and Google, next week. We note that Microsoft's EPS and revenue figures are expected to drop, which maybe ease the support enjoyed by the shares price, while Google is expected by the market to report a higher EPS figure as well as a higher revenue figure, which if released may intensify the market support for its share price. On Wednesday we get Boeing's earnings report. At the same time we highlight the reputational problems the company faces and which intensified since an airplane of Alaska Airlines lost a door while flying. Yet the quality and reputational issues seems to be getting even more intense for Boeing. It was just reported that Reuters that a Boeing of 757 nose-heel popped off in Atlanta International Airport over the weekend. At the same time, we note that Alaska Air reports that it found even more loose bolts on its Boeings, which tends to increase market worries even further. Also, we note that the United's order of Boeing 737-10 came under doubt as the company's CEO stated that the United Airlines is weighing plans to expand its fleet without the MAX 10. Should the reputational issues intensify further, we may see investors' confidence in Boeing's being shaken and thus weighing on Boeing's share price. Markets tend to push U.S. stock markets higher, yet we may see the Fed pulling the carpet under the market's feet. The market seems to continue to expect the bank to start cutting rates in the March meeting and deliver 6 rate cuts in the year. Yet Fed policymakers have stressed the possibility of the bank delaying any rate cuts for a later stage, which contradicts market expectations. We note that the bank is expected to deliver its next interest rate decision in 7 days and will be included in our next report. For the time being, we note that the release of the US GDP advance rate for Q4, which is expected to slow down substantially and could shake in US stock markets. A possible slowdown of GDP rate would be signaling that the US economy grew at a slower pace and could weaken US stock markets, yet at the same time it may be signaled the need for fast and extensive rate cuts by the Fed. S&P 500 continued its upwards motion over the past few days, breaking the 4,800 resistance line, now turned to support. We tend to maintain our bullish outlook for the index as long as the upward trend line guiding the index since the 2nd of November remains intact. Furthermore, supporting our bullish outlook are the 20, 50 and 100 moving averages, all tilted to the upside. Also, the RSI indicator has surpassed the reading of 70, implying a strong bullish sentiment in the market, yet at the same time it may also be a warning signal that the index is at overbought level and may correct lower. It's characteristic how the price action is flirting with the upper Bollinger Band, which may slow down the bulls. Please note that the index is running at record high levels, a fact that may cause the bulls to start hesitating. Should the bulls maintain control over the index, we may see S&P 500 breaking the 4,950 resistance level, and we set the next possible target for the bulls at the 5,100 resistance nest. In the case the bears take over control of the index's direction, we may see S&P 500 reversing course, breaking the pre-mentioned upwards trend line in a first signal that the upwards movement has been interrupted, breaking the 4,800 support line, marking the prior all-time high of the index, and continue lower towards the 4,660 support base. As we conclude this report, we would like to thank you for being part of our financial updates. From all of us here at IronFX, we wish you solid trading.